The RBA lifted interest rates for the first time in over a decade this week, and stock markets have been smashed in the US overnight as the central bank has announced its biggest interest rate increase in more than 2 decades. Joining us live now is Chief Economist at AMP, Shane Oliver. Shane, thanks so much for your time today.
Thank you.
Firstly, on interest rates here in Australia, how much more expensive is it going to get in the next 6 to 12 months?
Well, I must admit this is a bit of a guess, but we see the official interest rate heading up to around 2% by the end of the year and probably 2.5% next year. Now, hopefully that should be the peak. We do have more household debt in Australia than in the past, and the Reserve Bank is conscious of that, and that will make the household sector generally more sensitive to interest rate hikes. But the bottom line is we do have an inflation problem, and we're probably going to see more rate hikes ahead. In a big picture sense, you could argue, well, maybe we're heading back to more normal levels of interest rates. So I don't think this is a reason to be getting overly alarmed by it. In fact, I'd be a little bit more concerned if rates were going to stay at zero forever like they have in Japan. So I think heading back to more normal interest rates is probably, in a bigger picture sense, ultimately a healthy thing.
Okay, that makes sense. Is the government helping here? Is their budget spending actually making it worse and contributing to the inflation rise?
Look, it has contributed to some degree, but I don't think it's the main driver. Countries around the world are seeing a pickup in inflation. We're actually seeing a somewhat smaller pickup, 5% in Australia so far, 8.5% in the US, 7% in New Zealand, Canada, UK, and so on. So, in the great scheme of things, this is a global phenomenon. A lot of it's related to supply and demand disruption associated with the pandemic. Now, sure, that the big surge in government spending we've seen over the last few years probably didn't help, and probably didn't help in the US either. But by the same token, if we didn't do that, we'd probably still be stuck in recession. So in the great scheme of things, you can argue around in circles on this one, but I think the real issue here is the distortions caused by the pandemic as being the main factor. And they've, of course, been made worse by the developments in Ukraine and, of course, the floods locally.
Yeah. The Bank of England is warning a risk of a recession and inflation above 10% over in the UK. Is that something Australia needs to be worried about?
Yes, but the risks are much lower. The UK is over there in Europe. It's seen the issues with gas. It's seen a much bigger hit to confidence given the war in Ukraine, which is not that far away from them. And so therefore it's more exposed to that. Whereas in Australia, we do have many protections. We are a commodity producing country. That's provided a benefit for us. We haven't seen the surge in energy prices, electricity prices that they've seen in the UK. So that's not as big an issue. And I think the other thing that the Bank of England is pointing out, they've run a scenario there which says that if the Bank of England follows the interest rate forecast that the money market is factoring in, then they run the risk of recession. So I think they're also sending a signal to the money market that the money markets have gotten a bit too carried away here, that interest rates probably won't need to go to that level of the very high level the money markets are factoring in. The other point to note is that as the UK economy slows down, and there's a lot more signs of that than in Australia, retail sales, for example, going backwards. In Australia, they're still booming. Then that slowdown in demand will start to bear on inflation, I think, probably earlier in the UK than may even be the case in Australia. So it's certainly a risk. And I guess it just highlights the difficult balancing act that central banks, including our own, face. Although I'd rather be Governor Lowe than the central bank governor over there in the UK.
Okay, that's a fair point. The stock market's down today, fear driving the market in the US. We don't have a crystal ball, but are we in for a volatile time in the markets?
I think we are. I think this is going to be something we'll have to get used to for the next few months. The markets are adjusting to something they haven't seen in a long time, and that is higher inflation and higher interest rates. I do have a rule of thumb that a colleague pointed out to me once, that whatever the US share market does on the day of the Fed meeting, which was yesterday, it reverses the next day. We saw a massive rally, 3% rally in the US share market yesterday, so it's back down again today. So in that sense, it's consistent with that little rule of thumb. But I think the reality is this volatility is going to be with us for a while. I'm not in the camp that says we're going to see a recession. So I think by the end of the year, the US share market will be up. And likewise our market, but for the next few months, I think it's going to remain a fairly volatile ride.
Okay. Is there a silver lining? Do you think we're going to see wages going up here in Australia?
Look, there are some, it's not all negative. Obviously, higher mortgage rates are bad news for those, particularly who recently got into the property market. But obviously, bank depositors will see an increase in the income they get from their bank deposits. In time, I think this will help break the back of the wages drought that you've alluded to. For the last few years, we've got unemployment at 4%. Workers arguably should have more bargaining power. And you can also argue that these sorts of times often, this is the optimist in me, often bring out economic reforms. I'm hopeful that maybe something will happen on this front. I don't see a lot of it occurring through the election campaign, but maybe the pickup in inflation will see a return to productivity-enhancing economic reforms, like reforming the tax system. Well, that's a big ask. Maybe reforming the IR system, education and so on. If you get some action on those fronts out of all of this malaise that we're going through at present, then that would ultimately underpin stronger productivity growth and ultimately underpin more sustainable and even stronger wages growth. So that could be a silver lining in the cloud, although maybe you could argue that I'm a bit too hopeful on that front.
It could be. We'll have to wait and see. Shane Oliver, thanks so much for your time.
My pleasure. Thank you.